afternoon, everyone, and welcome to Stock Market Today. It's Allie Corm and Ken Shreve here with a breakdown of the action in today's session, where we did see a pretty big bounce today, but seems like it was a bottom fishing rally for the most part. However, we did see some quality action underneath the surface too.
Yes, indeed, Ali. Big gains for the stock market today. So we'll take a look at the REIT sector. Money has been flowing into REITs, almost like a recession-proof area of the market. So we'll take a look at Extra Space Storage. EXR is the ticker there. Also, reopened stocks did very nicely today. So we'll take a look at Avis. Budget, the rent-a-car firm, ticker CAR, and finally Edwards Life Sciences, which moved from the watch list to leaderboard today as it works on a cup with handle base.
Fantastic. Well, we will dissect those charts, but first let's take a look at the major indexes. So today we had the NASDAQ gaining about 2.1%, the S&P 500 up 1.6%, the Dow up 1.5%, and the Russell 2000 up some 2% as well. So some strong action here, but the NASDAQ remains below a key technical level.
Yeah, so right now it's really about the Nasdaq getting above that 50-day moving average. It seems like every time we get these nice percentage gains for the stock market, we're talking about the technical challenges that still exist for the Nasdaq and the S&P 500. So Nasdaq's really going to need to get back above its 50-day moving average first, and then it'll try to conquer that 14,000 level. The more volume that we can see behind the Nasdaq's move, if it does that, the better. It looked like at one point today we had volume tracking a little bit higher than Monday on the NASDAQ, so we'll see where that eventually shakes out. So good day of gains for the NASDAQ, but like you said, a lot of beaten down stocks, 40, 50% off their highs, just rallying sharply. So not many actionable stocks.
There were a couple which we will talk about, but first let's also take a look at the S&P 500 here, which is in a little bit more of a position of strength versus the NASDAQ. So finding support right around that 4,400 level and the 50-day line, but it has the 200-day as a hurdle to still clear.
Yeah, nice to see the S&P 500 back above the 50-day moving average, but you can see that 200-day moving average is just a hair below the 4,500 level, so that's a significant level for the S&P 500 to conquer. I think the index that actually looks the best right now is the Dow, so we could probably look at the Dow Jones Industrials. That's probably the closest index to breaking out of a downtrend here, but it still has to get above that 200-day moving average, I think, to fully break out of its downtrend. So good day for blue chips as well, helped by a strong earnings report from Johnson & Johnson.
Yes, it is earnings season, so that's something else that investors definitely need to keep in mind, not only for their portfolio in particular, but some of the bigger names could have a big impact on the index action. And of course, Ken, all of this is happening with the backdrop of the spiking 10-year treasury yield continuing its hefty ascent.
Yeah, I mean, the bond market is so clearly oversold at this point. You'd expect that yields are going to start to back up at some point. I mean, just think if this was an individual stock chart, you'd be looking at something that is so very, very far extended, and you can see the yield actually gapped up today. So bond market is clearly pricing in aggressive rate hikes by the Fed this year. It's not a question of if, but when it's going to happen. We have a pretty clear idea of what this path of rate hikes is going to look like, but the bond market and yields spiking to account for a higher federal funds rate.
And a trend that we are continuing to keep tabs on in terms of how it's impacting our investing decisions, no doubt. And so speaking of perhaps one area of interest to investors in an inflationary environment, fleeing to safety here. What about REITs? So here's a look at Extra Space Storage, EXR, popping up today by about 2.8%. Some volume behind the move. And Ken, we saw a cup with handle breakout relatively recently, and then this stock just went nice and quiet, some sideways action, and offering investors a chance to either initiate here or even add to their positions on the breakout.
Oh yeah, absolutely. So if for people that bought recently when it broke out over that first handle buy point, there you go, right there on the chart. Certainly had an opportunity to add to the position today. But I think the breakout today, the fact that the EXR broke out over last week's highs, this is a legitimate entry as well. So I don't think you're looking at an extended stock at all, especially if you're going on that second buy point. So it was a handle that formed soon after the first handle formed. So not extended here, and like you said, a good move with some volume behind the move. And we know that money has been flowing into REITs for some time now. People like these dividend, paying stocks in an uncertain market environment where technology stocks are clearly out of favor. With EXR, you get an annual dividend yield of 2.8%. So that's pretty good.
Yeah, it is. All right. And yeah, we got that RS line blue dot on the weekly. So a lot to like here, Ken. And now let's take a look at that reopening theme. As you mentioned, in recent weeks, we've been talking about those hotel names. There was that positive news from Delta Airlines last week. And now we have more news in the travel industry. So we've got these travel stocks on the move, and Avis Budget among them, ticker CAR, up over 7% today. A nice move in the month of March, and this stock pulled back to its 21-day line, and now trying to put some distance between itself and that moving average today.
Yeah, you can see earnings coming up in a couple of weeks, and you can see the growth that Avis has shown in recent quarters. I mean, look at this revenue growth ranging from 90% to 212% year-over-year growth over the past 3 quarters. I checked the estimates for the first quarter, which is, like I said, going to be out in about 2 weeks, and I think their revenue is expected to be up another 55-60%. So while the airline stocks continue to outperform, the hotel operators continue to outperform. Don't forget about Avis Budget, because this is just as much a reopen play as the airlines and the hotel operators. So it's a good example of a bottoming base here. You did have a breakout over a trend line today, so it was an early entry, but you can see volume was pretty light in the stock. So we don't like to see that, but could end up being a setup today. We'll see if volume rolls into CAR, and maybe it can fuel a breakout from here ahead of earnings.
Yes, and investors may be looking at last fall and seeing this huge spike. So a bit of meme stock interest in Avis Budget, at least momentarily. Do you think that provides a little bit more wind potentially at investors' backs here, or
Yeah.
how do you?
Well, I'm not, certainly when it soared a couple of quarters ago on earnings, there was some meme, stock involvement there. I don't know that this is still mentioned in the same breadth as meme stocks. In fact, meme stocks in general, I don't even know if GameStop is still a meme stock, or AMC. At one point, Avis Budget was. But I do like the technical setup here, and there are some fundamentals here. I mean, this does look to me to be an institutional quality stock, just because of the big revenue growth that you have in recent quarters, and a lot of pretty favorable fundamental metrics.
And this theme is one that we're seeing pop up more and more on our screens. All right, and now let's take a look at Edwards Lifesciences, which you mentioned, Ken, moved from the leaderboard watch list to the leaders list, and with a gain of about 4% today, a nice setup day, breaking a downtrend in the handle.
Yeah, a lot of industry groups in our database performed very well today. A lot of 3-4% gainers, including the medical products group, which Edwards Lifesciences is a member of. I think that group was up more than 3% today. So EW did even better than the group, and like the setup here. We had it on the watch list. They are reporting earnings 1 week from today. So next Tuesday, we're going to hear from Edwards, and the thinking is we're going to be able to build a decent profit cushion here ahead of earnings. It was started as just a quarter size position in leaderboard, so just a nibble position, a little pilot position, and we'll hope to be able to have a little bit of a profit cushion before earnings comes up next week.
And so if this stock does break out tomorrow, do you think, depending on how it does it, would that warrant raising that quarter to a half?
At this point, because earnings is so close, normally we would it would be a good opportunity to add, but I suspect that we'll probably keep it as a small position as the earnings date arises, and because if it does make that move tomorrow, again, we've got earnings in 5 business days next Tuesday, so probably keep it as a quarter position, and then we'll see. But it's right on the verge of a breakout from this cup with handle base.
That it is. All right, Ken. Well, thank you so much for breaking all of that down for us and for everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details. Like I said, it's earnings season, so there's a lot to cover, especially right now. Netflix down 20% after hours on reporting its first subscriber loss in some 10 years. So that's just one of the headlines this earnings season. Yeah, that we will be covering come tomorrow. There might be a little bit of a ripple effect on that and other reports coming out. And our team is there to not only provide you with what happened, but how you should interpret it, Ken.
Yeah, this is really, I mean, Netflix is just a perfect example of the dangers of buying a stock on the cheap, or buying a stock as it's gone, from $700 all the way down to 330, thinking that you're getting a deal down here. And but the fact is that fundamentals have been deteriorating at Netflix for quite some time, which is why the stock is so far off its high. So just a good lesson not to buy the damaged goods in the stock market, because there's often a pretty bearish fundamental story that maybe the market doesn't quite understand yet. But Netflix has been under pressure for several months now because of this slowdown in earnings and sales growth and subscriber growth as well.
All right. Well, a great hot take there. And we'll provide more in-depth analysis on tomorrow morning's show. So once again, please join us, investors.com/IBD Live. We'll see you there, and we'll see you right back here tomorrow after the close.